Hello everybody, welcome back to Univesco TV. So I'm here joined with Mauro. Everybody seems to be familiar with Mauro, all my viewers who've been watching my videos. So today we're going to have a general talk about what's happening in terms of the financial and the political world around us. Now I'm here myself here in Indonesia. Mauro's back in Shanghai, as I've not been able to travel back to Shanghai yet. So I'm just like having a Zoom call with him and trying to understand how possibly we can negotiate, how possibly we can have a general talk of what's happening around us, just to give a deeper understanding to our viewers of what's happening around us in terms of finance and the political world, but also what kind of opportunities or opportunities are available in these days. So Mauro will talk about whatever that he has read over the past couple of weeks. I will talk about what I have read or heard or have interacted with people that I know back in Shanghai or all around the globe, even including my clients. So welcome back, Mauro. It's been a long time since you made a video.
Thank you, Rishi. It's very good to be here with you, so we can share a chat. And basically update each other on what is going on.
So Mauro, as you're okay, let's start off with Jack Ma's news then. Mauro, you're based in Shanghai yourself currently now. What is the situation in China now? Where is Jack Ma? Like, that's the main question that everybody seems to be asking.
Yes, basically, if memory serves, the last time that he was like in public, it was like in October, yes. I think, and then there were some private like a questioning to him about what should have been the IPO for Alibaba. Which eventually was blocked by the Chinese regulator. And also that speech, which I was mentioning before, was quite critique towards the same Chinese regulator. So some of the journalists, the reporter, have been saying that probably this criticism basically triggered the reaction of the regulator. However, there is also another story, which is that the decision of avoid Alibaba to be listed, to have the IPO, was already taken, and that the idea of that critical speech was some sort of last try in some way. And then after that there was this questioning, and after that also Jack Ma was supposed to be chairing one of the competitions that Alibaba sponsors in Africa, but in that case he was substituted by another top official of Alibaba in that respect. I think in this moment that probably Jack Ma wants just to let the water pass under the bridge, so wait for this time to pass, and then in the few months or so he will be quietly coming back and basically go back to his work. It's when the companies here get to decide, and here you always need to have this close relationship with the regulators. It is this IPO was seen as as an issue for the stability and so on. So this decision was taken in this respect. So we'll see what will happen in the next few months.
So,
what do you think about this?
So Mauro, I just wanted to, now that you brought up some points, I just wanted to raise those points as well with you. Back in the day when we had the financial crisis of 2007 and 2008, back in the US, started off in the US and global recession basically, it was said by the American regulators that the banks are too big to fail. American banks, all these major investment banks are too big to fail. Would you say that these Chinese tech giants or Tencent, Alibaba, are they too big to fail? Do they represent a huge proportion of the Chinese tech industry and also in general the whole economy? Because Alibaba is one of the largest, if not the largest groups in mainland China. And the fact that the IPO was halted in Hong Kong, on the Hong Kong Stock Exchange, it wasn't on the mainland. So the fact that it was the Ant Financial, the financial arm, so Alipay's parent company, it was Ant Financial's IPO which was halted in Hong Kong. So how much control does the Chinese government have over Hong Kong, even though Hong Kong is supposedly a free market? And second of all, would you recommend, with all that's happening around, would you recommend to the clients the Hong Kong Financial Center for investment or opening up companies or businesses?
Look, the thing here is that yes, there is always this problem of too big to fail, because if one of these giants that also employ a lot of people and many other companies rely on this have some problems at some point, becomes difficult to save them and to basically give a solution to all of those individuals and companies that rely on them. But here there is also like a struggle between being too small and too big. For example, in Europe, we have a problem that we don't have tech giants that can actually compete in the same way with the USA giants and with the Chinese giants.
Exactly.
So, it's usually in this period of time we say that the antitrust will save capitalism, but at this point to compete in this globalized world within the biggest powerhouses, finding a balance is kind of complex. In regarding instead your question about Hong Kong, the thing here is that Hong Kong is indeed a free market, but the Alibaba company, as well as all the mainland China's companies, even when they go out, this could be Hong Kong, this could be New York, and so on. They are still companies that are based in the mainland China, and in this respect, they will answer to also the Chinese regulator. So there is always, also in this case, is kind of hard to find a balance. The same situation happened also with Douyin, with TikTok.
Yes.
So that in America was called. They tried to rebrand themselves as separate from the mainland. They tried to have this breakup between the two. On the other hand, the Chinese government said this belongs to the mainland China. So again, is always kind of complex to actually assess these situations.
I agree with you on that point. When it comes to investing in mainland China or in incorporating a company in mainland China, you have to navigate the waters in such a way where you do not hurt the government sentiments, you can say, in that way as well. But also there are opportunities available in China to do business, for sure. It's a capitalist economy. People say it's communism, but at the end of the day, it's a free market in China as well. There are banks, okay, even though they're state controlled, they have a stock market, they have banks. If you work hard in mainland China, you do get your reward for that. If you work hard, there's a huge market, growing middle class, growing elite class. There's plenty of opportunities, and then the infrastructure available in mainland China, it's absolutely amazing. That's why you have all these, even automotive giants such as Tesla investing in Shanghai as well, like opening up a $5 billion gigafactory. So for sure, there are opportunities available. You know, when it comes to tech companies or when it comes to these big companies, it's very hard to, as you said, strike the balance, because at the end of the day, Alibaba is employing hundreds and thousands of people globally, not just in mainland China. The fact that it's employing so many people, you have to protect those jobs, because those jobs are then in turn providing revenue to the government, to the economy. They're basically people who are working, paying their taxes, spending money in the economy. So there's circulation of money happening in the economy because of those jobs. Now, if you let someone become too big, they become more powerful. So yes, there was a time when Jack Ma was like saying, oh, wait, a little bit too much against the government, or maybe everybody can interpret it in their own ways. There's no right or wrong when it comes to this. He has his own freedom of speech as such. But the fact that, you know, personally, I feel like in China, you have to navigate the waters very, very carefully. The waters can be very rough. And this is something that many people don't understand, especially for foreign investors investing in Chinese companies. Make sure that the fundamentals are correct. For example, in the last, I'll just like, I'm not diverting from the topic as such, but like in the last, this week, twice, there has been an instance where the US regulators have not been able to come up with a decision of whether to delist the Chinese telecom giants or not. So that's China Mobile, China Unicom, Hong Kong Limited, and China Telecom. So nobody exactly knows what's happening, and because of which the share prices of those companies have been going down. They've lost market capitalization because at the end of the day, investors are not sure whether those companies will stay on the exchange or not. So when I feel like, of course, it is also politically motivated as well. The trade war is a huge factor. Trump versus Xi Jinping. There's a lot of factors on that, which we'll talk about. Do you feel in these kind of environment, or in these kind of times that we live in, where we've just like the pandemic is not behind us, the fact that, you know, there's huge global uncertainty in the financial markets, how to navigate? And I just want to know your opinion. Personally, I feel like even the article I wrote today, Rishi's opinion that I write once a week, I wrote that it's all about diversification of your portfolio into different asset classes. How do you, and what do you recommend?
Totally. I mean, diversification is really, you know, the bedrock of a solid investment, especially in this time. You know, nobody could have foreseen the pandemic, of course, before that, and you know, all this. You can have all the models and forecasts. But eventually something like this happens, there's not much that you can do. The only thing is that you have a well-diversified portfolio, and then as something goes down, then there will be something going up. For example, you know, all the pharmaceuticals, all the technology companies actually gained substantially during this time, and you know, especially you know, the pharmaceutical with all the vaccination therapies and so on. This will be something that is going here to stay, and it might be something very interesting to look at, something with solid fundamentals, and you know, also the technologies that we've been becoming more and more familiar with. For example, Zoom itself, you know, that boomed during the pandemic, and then, you know, after the vaccine, we saw that the stock prices decreases because you know, is as people will go out, then it is expected that less people will actually use it. But at this point, all of us got used to it, and even after that, this came here and will stay with us. Many of our habits changed, and this is also something that we need to take into account when we decide in what to invest. Definitely is something that we need to consider.
Of course. And as you mentioned, Zoom, would you believe like Zoom was only $70 at the start of last year, January last year. And then boom, one pandemic and the stock zoomed past $580. It, I think, touched on a high of $588 or something like that. So the point being, like, is the boom in the tech sector last year, mid to late last year, was colossal when it comes to Amazon, Apple, all the stock prices of all of Google, all the tech companies, tech giants all across the globe. They surged fast because people were, during the pandemic and lockdown state, they were ordering online. So you have all your delivery companies, their stock prices were going up. You have your online video communication tools such as Zoom and all them, their stock prices were also increasing, because at the end of the day, that's what people were doing. They were working from home. But as you just mentioned, so very valid point that, the fact that the pandemic is somewhat behind us, especially in China, where it's relatively safe now, people are more comfortable of going to the offices. They're more comfortable going to their workplaces. So for them to have a work from home or Zoom-based video call or Zoom-based something, it's not something that fits well in the Chinese culture, because Chinese culture is all about meeting in person for business meeting to conduct business. Chinese business is not about, there's an element of face-to-face meetings, which is more fun. For example, when you made the videos in Shanghai, there was more fun, or there's the element of being there for both of us, was that the fact that in person, it was more natural for us to make those videos. Whereas on Zoom, it's not the same. There could be a lag in the internet connection, or there could be time zone difference or whatsoever. So therefore, when you're in person, the business meeting has its own effect. So definitely the vaccines coming out, Pfizer and BioNTech, UK has approved the AstraZeneca and Oxford University vaccine. So as the vaccines are being rolled out, and I hope the pandemic will soon be behind us, I feel like we are going back to the normal ways that we were doing pre-pandemic. And it's something that everybody's looking forward to, because I experienced one hell of a year last year, with lots of ups and downs. So diversification of the portfolio is important when it comes to investing. Well, one thing that people have to understand is nobody can price in these kind of risks, such as pandemics or natural disasters, natural calamities. But at the end of the day, the best way to avoid that is to reduce the risk, to mitigate the risk, is to diversify the portfolio. And also when you're diversifying the portfolio, make sure that you're not just necessarily diversifying the portfolio on one asset class, or diversifying the portfolio, one particular market. You're diversifying the portfolio across major regions and major markets. So don't just diversify your portfolio in all of the US exchanges, or UK, or Europe, or Germany, or whatever, anywhere you want, or China. Make sure that you have a portfolio where you have some securities in China, some securities in Australia, some securities in UK, USA, all across, some in Europe as well, Germany, France, Italy, whatever. And that way you'll be able to mitigate the risk as much as possible. Risk management is very important when it comes to investing. That's what I tell my clients all the time. And even though it's very lucrative to invest into a booming sector, but one thing people have to understand is investing in a booming sector doesn't necessarily yield the best results, because at the end of the day, you have missed opportunity. It's better to invest in something that hasn't kicked off yet, because once you're on the lower end of the curve, you're going to ride all the way up. But if you, some people who started investing in Zoom, okay, they made some money, obviously, because Zoom just surged fast, but it's one of those few ones which surged. If someone had invested at Zoom at $550, now that stock is $344. So people have lost money. So it's very important to understand what exactly is happening, and it's very the charts alone don't say a lot. You have to understand the financials, the fundamentals of that company when you're investing. And this is what something that I tell my clients all the time.
Yeah, indeed. But also you remember in previous videos we were talking about lacking coffee and the markets that were booming because they supposedly became bigger than Starbucks, and then it was clear that there was something wrong with that, and then the regulators found out that this was not correct. So looking at the fundamentals and looking at what is behind the company is definitely paramount. In this respect also, I was reading about Bitcoin and the speculation around it, since now many are saying that they might break the threshold of $146,000.
Yes.
I think
Per coin, yes.
And also here just again we should reinforce the concept that we need to be careful, since a company you can for a company you can see what are their products, what is their performance. This Bitcoin has its value as long as people believe that Bitcoin has value. So and there isn't really something behind it, something the gold, or since it is also many times associated with being a reserve similar to the gold. But here there is really nothing keeping its value as it is. And I remember also in around 2017 that there was this race at Bitcoin again. I was asked also by many of my acquaintances to say, oh, should we invest it now? And I said, I told them, look, there was this spike now, but at some point it's gonna go down. And actually this happened around a few months later. So again, we need to be very careful with these ups and downs.
Of course. And the spike in Bitcoin, the volatility in Bitcoin is such where I remember there was a time when it touched $20,000 and people wow, it was like the highs of that particular time. Then it crashed all the way down to 9,000. So from 20 to 9,000, that's huge. And then it's back up to 34,000. So it's very hard to price what exactly is happening. Bitcoin is very speculative. So it's very difficult to understand what's happening. If you want to invest in Bitcoin, it's one of those you can maintain in your portfolio as a cryptocurrency. Yes, cryptocurrency is the way to go forward, I would say. But you have to at least diversify the portfolio in a way that cryptocurrency doesn't represent a huge portion of your portfolio. Unless you're able to handle that risk, are we able to maintain that risk? And if you have that risk appetite, for sure, well and definitely go ahead and invest everything into Bitcoin.